So I'm going to start the weekend report. We're going to look at the stock market, and I'm going to dig a little deeper into why I decided to take profits on our stock market position, and just go to the sidelines. Um, Before I do that, I'll just say again, I think I'm done trading energy. Um, I just can't seem to make my cycles or sentiment or the COT reports. Nothing that I try seems to work on the energy sector. I admitted defeat a long time ago in the agricultural sector and the natural gas sector, and I think I just have to admit defeat. I just don't really have any tools that work consistently in the energy sector, so I'm just not going to be trading that anymore. I'm just going to give up on that one and let somebody else trade it. Maybe other people have better tools that work. None of mine do, so I'm not going to be trading the energy anymore. All right, here's what I'm looking at. We're 5 weeks into this daily cycle. Um, if if this was going to turn into a final parabolic move and a blow off top, I would think by 5 weeks we would at least be testing this high, and that's what I was expecting this week. After Friday's big move on the jobs number, I thought we were on our way. Monday, was kind of a nothing day, but it did manage to push above this peak, so we had a higher high. We weren't terribly overbought or anything at this point, so there was just no real reason for the market to pull back this week. We've got a FOMC meeting next week. You would think that the Fed would want to have the market at or very close to the all-time highs ahead of that meeting, where they are going to raise another quarter point. And instead of getting a strong push higher this week, like what I was expecting to happen. I mean, realistically, I thought we would be up here at 28.75 by the end of trading on Friday, and instead we've tagged 2800 and we're just pulling back, and so this week just did not follow through at all with what I was expecting to happen. Moving on to the NASDAQ, kind of got that same uneasy feeling here. We had a nice breakout above 7,500 on the employment report last week. We got a little follow through on Monday. I thought we were good to go. It looked like we were ready to take off Tuesday morning. But then by the close, we had lost all those gains. And now we are actually closing back below 7,500. And that's not what I wanted to see. I wanted this to be a breakaway gap, and I wanted to start seeing some fireworks. If this was going to be a parabolic move, then we shouldn't be wasting weeks going back down or sideways. And there's just no good reason for this to be going down this week. Nothing significantly has changed. It looks like interest rates have topped for the time being. I think we probably put in an intermediate cycle bottom in the bond market, so interest rates look like they are pulling back and probably will for several weeks, maybe even a couple of months. So there doesn't seem to be any real pressing need for the stock market to be pulling back here. Not if we were getting ready to move into a parabolic blow off top. We should be, this breakout should have taken hold, and we should have started moving higher and putting some distance between price in this breakout level at 7,500 instead of dropping back below it. Moving on to the semiconductor index, kind of the same thing. We had a nice breakout here last week, and it looked like we were on our way. But instead of getting some good traction to the upside, we've just reversed, and now we're forming a coil here, and there is risk that this coil could result in a sharp move lower. Um, we've got a big event next week. We've got the FOMC meeting. They're going to raise rates again, and at this point, uh, the market is not telling me that it is ready to take off to the upside. So um, I'm I'm going to be cautious. We've got some good gains in that stock trade. It just seemed, after seeing, the market was just going to go nowhere on Friday, and the week did not play out like I was expecting it to. Um, that was the decision. Take the profits. They're still pretty good. And of course, we didn't get out at the exact top, but we got out with some good gains. And now I'm gonna at least wait till the FOMC meeting and see what happens after that FOMC meeting. And if this coil in the semiconductor index were to break downward, and say we start moving down towards a daily cycle low, then as I explained, there's a possibility that the reason this breakout isn't taking hold is simply because we're not ready to move into a parabolic blow off top. That would mean that the odds favor the 10 to 15 year bull market is still ahead of us, and if that's the case, then we're just stretched too far above those long-term moving averages to keep going higher right now. We're going to have to go sideways for a while and allow those moving averages some time to catch up before the bull market can continue moving higher. So I'll go over that in a minute, but the next thing I want to look at is some weekly charts. All right, so this also is starting to become a bit concerning to me. We are 5 weeks into this new intermediate cycle, and it's a little bit hard to see on this chart, but we've closed back below that 10-week moving average. And that's just not what I was expecting to happen. If we're going to have a blow off top, a parabolic move, then we need to get above this 10-week moving average, and we need to start getting some separation from it to the upside. Most ICLs, even over the last couple of years, they don't tend to screw around very long. Once the ICL is in, we tend to get back above this 10-week moving average, and then we get moving to the upside. You can see back here on the Brexit, we did it in 1 week, recovered it, and started moving to the upside. After the elections, recovered it the first week, started moving to the upside. The March ICL, by week 2, we were above it. The August ICL, again, by week 2, we were above it. Here we are 5 weeks into this, and we've closed back below that 10-week moving average. So, a character change from what we have become used to out of these intermediate cycle lows. All right, so here's a little bit longer view of the bull market. And you can see during this phase before we started this 7-year cycle low, price got a bit above the 200-week moving average, but didn't really get stretched too far above it. We did start to get a bit overdone on the upside here at the end of July before we moved down into this what I think is going to be a yearly cycle low. And that's not a big concern if we were going to start a parabolic blow off top. If that was going to happen, then we would recover and we would go very far above this moving average, and that would be our bubble, and that would be the top, and then we would have at least a couple of years, moving down into the next 4-year cycle low due in 2020. Um, but like I said, we're just not getting that upside follow through that I was expecting, and so that opens the question that that we really are in a long-term secular bull market that still has 10 to 15 years to run. And if that's the case, then we aren't going to be able to sustain these um, extreme moves above these long-term moving averages. If price gets too far above these averages, then one of two things has to happen. Either you got to come back down to tag it, like we did here at the 7-year or 4-year cycle low back in early 2016, or uh, price is going to have to move sideways for a while and allow the moving average some time to catch up before we can move higher. And you can see something kind of similar to that happened in 2015. We got the powerful move in 2013 and in 2014, and that uh, led to basically a sideways year in 2015, and then the 7-year cycle low in 2016. So very often, these periods of easy gains where the market, just tends to go up and up and up, and it's easy to make money, gets followed by periods where it's just difficult to make money, where the market doesn't go anywhere, uh, where the market has to consolidate and either move sideways or move down before we can set up the next period of easy money. And so, that's basically what happened in 2015, and for a good deal of 2016, we just basically went pretty much nowhere for almost 2 years, and then that set up a period of very easy trading conditions for the next almost a year and a half. Coming out of the election, the market just went, more or less straight up. The corrections were very mild, very easy to make money. And if we are in that 15-year, 10, 15-year bull market scenario, then we've probably just gotten too stretched above this long-term moving average, and we're going to have a period of choppy, going sideways market in order to set up the next leg up. And so that's what I am starting to lean in that direction. Since we aren't really getting the follow through and the parabolic kind of price action that I was expecting by now, it's now starting to look like it more likely we do have 10 or 15 years of bull market ahead of us. And if that's the case, then we going to have to go sideways for a little while and allow this moving average some time to catch up to price, because we just got a little too stretched at this top. It was just a little too easy to make money here for the last year and a half. And so now we're going to have to pay the price of that easy money by enduring some sideways, difficult markets that are just hard to make money. I do think we are going to make higher highs. I don't think this is the top of this 4-year cycle. So I do think we are gonna make higher highs above this before this 4-year cycle tops. But unless something changes in a big hurry, it doesn't seem likely at this point that we're going to get the parabolic blow off top that I was looking for, with a top into July. At this point, we just wasted too many weeks here, and so I'm really starting to doubt that we are we're going to get a parabolic blow off top at this point. It just now seems like it's a lot more likely that we're in the 10 to 15 year secular bull market scenario. And in order for that scenario to play out, we're going to have some sideways action, you know, maybe at least the first half of this year, before we can really set the stage for another leg up. So while I do think we're probably, I'm going to say the odds are pretty good that we're going to get to 10,000 by the end of the year, but if not, I do think we're going to get to 10,000 before this 4-year cycle tops. But we could very well be in a period where we just chop back and forth in a range between 7,500 and let's call it 7,000, or maybe a little below 7,000. We could just chop back and forth here into the middle of the year before we consolidate enough to set the stage for the move up to 10,000. So if this scenario is what's going to play out, then we've got to change our trading strategies. And that would mean that we're going to have to, we'll have to see what next week, how that plays out. But if this is going to turn into a sideways consolidation, then we're going to have to change strategies, and we're going to have to try and let's say buy when the market gets oversold, and then sell pretty quickly when it gets overbought. And you can see, we're kind of already getting into that kind of a scenario. So instead of the market staying overbought like I was expecting, typically happens as we come out of an intermediate cycle low, we're getting overbought and then immediately pulling back. And we didn't quite get oversold here at this half cycle low, which also occurred earlier than what I was anticipating, or what is normal. Usually a half cycle low during a first daily cycle will occur somewhere around day 20 to 25. Well, it came on day 10. So already, kind of a strange character change to get the half cycle low that early. We get up here, we get our breakout, and then we just don't get any follow through. The overbought conditions result in an almost immediate pullback. So we may be in a market where we just have to buy, when the market gets oversold, and then sell pretty quickly when the market gets overbought. In a trading range, that's pretty much the only way you can make money, because you just don't get a follow through in either direction. There's no follow through to the downside. There's no follow through to the upside. Very similar to what we're seeing in the gold market right now. I warned people this was likely to happen, that we just whipsaw back and forth. And so we'll just see what happens after the FOMC meeting next week. But I am mentally ready to shift strategies if need be, and put in place strategies that have a better chance of making money in a consolidation phase where we just don't get any follow through either up or down. All right, so just a quick look at the dollar and then gold. So we're getting kind of the same thing happening in the dollar. It's just not going anywhere. It's not really behaving like you would expect coming out of an intermediate cycle low. You would expect, by now we would get some follow through to the upside. We would at least take out these highs, and we're just not getting it. The dollar's just going sideways, going nowhere. Very uncharacteristic of a move out of a intermediate cycle low. And that, of course, is producing that, that same sideways whipsawing action in the metals. Uh, for the last 4 weeks, the miners have done nothing but just churn back and forth, not allowing, either side, bulls or bears, to make any money. We've got support here at this 200-week moving average. They don't appear to want to close below that, even though we've had multiple chances for it to happen over the last 3 weeks. And so today I just gave up on the short. I don't know, it just may be that this 200-week moving average is strong enough support that we're just not going to get any follow through to the downside. And, the rest of this ICL may just turn out to be a nothing sideways move. Or, maybe that's all we're going to get in gold, and we already got our ICL and we're just churning sideways. But, neither the dollar nor gold looks like it wants to give us any kind of a directional move. So, we lost about 1% on our latest gold or metals trade, and I've seen enough. I don't want to play in the sector anymore. Not at the moment anyway. Nothing looks like it's ready to give us any kind of a directional move. Not the dollar and not gold. So I'm on the sidelines for now. All right. So here's the Dow. Kind of the same thing. Never 5 weeks into this, haven't been able to close above the 10-week moving average. That's long enough for me. I'm taking the hint. Going to go to the sidelines, take our gains, be satisfied, see what happens until after the FOMC meeting, and then we can make a decision on whether or not it looks like we're finally going to break out and get some upward movement, or whether we're just going to be stuck in a trading range for the next month or two, and if so, then we're going to have to devise a different strategy, because our old strategies that worked during this part of this 4-year cycle, may not work during the first half of this year. All right, so we'll take a break at least until Wednesday, and then we'll reassess after the FOMC meeting and decide how to proceed from there.